Welcome back to the channel, where I'll dive into the latest insights and trends shaping our world today. In this video, I'll be delving into a pressing topic that's been making headlines: China's economic woes. China's economy is facing significant challenges, including a shrinking workforce, stagnant investment, and a collapsing home-building industry. The country's GDP growth has slowed down, and the youth unemployment rate is high. The Chinese government's efforts to stimulate the economy have not been successful, and the country's debt levels are high. The situation has led to a decline in morale among Chinese youth, who are giving up on their future and choosing to be full-time children instead of finding a job or starting a business. They are depending on their parents and hoping for a salary for just living with them. The Chinese government's recent crackdown on foreign businesses in Beijing is also causing concern among investors. The situation is worrying because the Chinese economy is a significant driver of global growth, and a collapse could have far-reaching consequences. If you haven't already, be sure to hit that subscribe button and give this video a thumbs up. Let's jump right in. China has experienced a remarkable increase in the average income of its citizens from 1990 to 2019, from a very low $330 to almost $10,000 annually. This growth is no small feat for a nation of over 1 billion people, but it came at a cost. The Chinese government implemented forceful and questionable policies to achieve this growth, including the highly unpopular one-child policy, which devastated generations of families over its 35 years in effect. The policy is now coming back to haunt China, as it is expected to have more older people than young workers in the coming decades, due to the lack of replacement births. This demographic shift is a major concern for the country's future, as it means there will be fewer productive members of society to support the growing number of retirees. However, despite the impressive increase in average income inequality is growing fast in China and making it look more like the US. The level of inequality in China in the late 1970s used to be less than the European average, but now it is closer to those observed in the most unequal countries in the world. The income growth has been significantly skewed towards the top earners, while the bottom 40% of Chinese households ranked by income, totaling more than 600 million people, had a per capita disposable income of just $1,721 in 2019. This income inequality has amplified economic inequality across generations, as poor families have more children but invest less in human capital per child, leading to income inequality that persists and enlarges across generations. Despite these challenges, there is a lot of cultural pressure on China's youth to continue the same progress for the family and the country that their parents and grandparents witnessed. However, this expectation is unrealistic, given the demographic challenges and economic inequality that the country faces. The pressure to succeed and fulfill their parents' expectations can lead to high levels of stress, anxiety, and depression among young people. Moreover, the cultural norms and expectations can limit young people's creativity, individuality, and sense of purpose, which can have negative effects on their mental health and well-being, as well as their ability to contribute to society in meaningful ways. In China, there's a significant societal expectation for adults to shoulder the responsibility of caring for their parents and, at times, even their grandparents. Simultaneously, they are challenged to excel in their professional lives, save for a home, enter into matrimony, and continually advance. This multifaceted burden places immense pressure on the Chinese working populace, a group already dwindling in numbers. However, the challenges do not conclude there. These are challenging times in China, particularly for the young and eager job seekers who are grappling with a scarcity of employment opportunities. In the month of May, the youth unemployment rate reached an alarming high, nearly quadrupling the national average. At present, China's youth unemployment rate stands at a staggering 20%, with almost 1 in every 5 young individuals unable to secure employment. This predicament is partially attributed to the Bailan movement, but is equally influenced by the scarcity of available job positions. In the early 2010s, the Chinese Communist Party, CCP, launched an ambitious campaign to encourage students to pursue higher education, a laudable endeavor in most circumstances. A better educated populace generally augments the overall economic strength of a nation. However, in China's case, the plan did not unfold as anticipated. The CCP anticipated that China would have progressed into a more mature economy by this point, yet the nation's economic landscape continues to rely primarily on low-income manufacturing jobs. Consequently, when the government pushed students towards higher education, these students came to expect lucrative, skill-intensive employment upon graduation. Presently, the CCP is grappling with the realization that there are insufficient job opportunities to accommodate this highly educated cohort of graduates, resulting in fierce competition among them for the few positions available within China's economy. In such a situation, one would typically expect a competent government to formulate policies designed to attract foreign companies seeking skilled labor and stimulate local business activity to enhance job prospects for graduates. However, the CCP appears to be pursuing a contrary approach, as we will soon explore. In light of all these factors, it becomes evident why securing employment is becoming an increasingly formidable challenge for China's young populace, with the CCP offering little assistance in addressing this pressing issue. In the early days of the COVID-19 pandemic, Wuhan, a bustling city of 11 million, went into lockdown by the end of January. By December 11th, an estimated 2,100 people had likely contracted the virus. This prompted the White House to consider stricter travel restrictions, while Americans scrambled to escape Wuhan via a charter flight organized by the State Department. Despite the effective containment efforts by the Chinese Communist Party in the early stages of COVID-19, the situation took a different turn in 2022. The number of COVID-19 cases surged once again in Chinese cities. In 2022, the CCP initiated stringent measures to achieve its ambitious goal of zero COVID, which unfortunately resulted in devastating lockdowns that adversely affected countless businesses and hindered any potential economic recovery efforts by Chinese enterprises. The global economy was also experiencing a slowdown, further impacting China's local job market. As a result, the job market in China continues to shrink, placing increasing cultural pressure on the country's youth as they age. Similar to the American dream, the Chinese dream often involves securing a job and investing in real estate, which holds significant cultural importance. Owning real estate in China is associated with higher social status and increased desirability as a marriage partner. The historic one-child policy enforced by the CCP led to a significant gender imbalance in China, with approximately 70 million more men than women. This disparity intensifies the competition for marriage partners, paralleling the fierce competition in the job market. While it's important to note that this isn't the sole factor contributing to China's real estate market trends, it does play a role in driving up property prices. Even though there are signs of a real estate bubble in China, many households still find it nearly impossible to purchase an apartment due to the stark disparity between average Chinese incomes and property prices. A comparison between home prices and residents' average incomes in Chinese cities often places them among the top 10 cities, with the most significant discrepancies, a situation that hasn't improved significantly in recent years. Securing a job in China has become exceedingly challenging due to intense competition for a limited number of job openings. If one manages to secure employment, they often find themselves in an intense work culture with long hours, such as the infamous 9-to-9 or 996 work schedule, which entails working from 9 a.m. to 9 p.m. 6 days a week. This demanding work environment is accompanied by relatively low salaries, leaving employees with little room to voice concerns, as employers can readily replace them due to the high demand for jobs. Also, foreign investment in China has reached its lowest point in 25 years, with direct investment liabilities plummeting to a mere $4.9 billion during the April-June period. This marks an 87% decline from the previous year and stands as the lowest quarterly figure since 1998. Consequently, Chinese stock prices have seen a decline, with the CSI 300 index down approximately 4.2% for the year. The trend continues with global investors becoming net sellers of Chinese shares, as foreign institutional investors have withdrawn $10.2 billion from Chinese domestic stocks this August. While the Chinese Communist Party attempted to bolster market confidence through tax cuts on trading, These gains were short-lived, and investor concerns persist. China's economic prospects appear bleak as the CCP censors economists and analysts, preventing them from freely expressing their thoughts on the country's economic situation. Many experts outside of China believe that the nation may be heading towards a slowdown reminiscent of Japan's experience in the 1990s, resulting in a prolonged period of economic stagnation. Despite being the world's second-largest economy, China's per capita income is significantly lower than Japan's, making it more susceptible to extended economic challenges. As we delve deeper into these issues in future videos, be sure to subscribe and hit that notification bell to stay updated on the latest developments. Thanks for watching, and we'll catch you in the next one.